um, there are people waking up, and I think that I think that we've seen a much more concerted drive towards gold over the last couple of weeks, because what we're seeing are larger purchases. People saying, "Geez, this is something that is very concerning," and a lot of these people that are buying haven't bought before. And so they're not understanding the value found in silver. They're running to gold because they're afraid of the big geopolitical implications. So
Meet Andy Schectman, President and CEO of Miles Franklin. With his extensive knowledge of the precious metals markets, Andy offers a unique front-row perspective, seamlessly connecting the dots between politics, geopolitics, and fiscal matters. His insights are not just informative but revealing, providing a compelling glimpse into the intricate workings of the world. Don't miss out on Andy's revelations as he fearlessly exposes their plan.
yeah, I mean, very much so. A lot of the things that we have talked about in terms of economics have, in many cases, escaped the public. And that's by design. Certainly, the people pulling the strings, the puppet masters, they drop crumbs, and you don't have to be overly astute to see the crumbs and to follow the path. But the thing of it is that you have to employ some effort. The problem with the mainstream is that they, even those that are very well read, have been reading perhaps the wrong stuff, and they learn more and more about less and less till they seem to know everything about nothing in a very pigeonholed manner. They are not seeing the broad truth of what's happening. You have to search it out, listening to people like yourself and to other alternative media sources. So, when you talk about many of the economic things that I speak of on a daily basis, whether it be bank bail ins that were written into law in the Dodd-Frank Act, no one seems to know. Whether it be about gold being reclassified Tier 1 by the BIS, no one seems to know. Whether it talk about the expansion of the BRICS, who the hell are the BRICS? People say, what is that? No one seems to know. The things that mean so much to me in my thought process, no one seems to know. But when you see something as horrific as war, and the protests on either side, it's catching people's attention. And I think it's also, there's a very strong anti American tone to this anti Western tone that if you're not a little bit concerned and you're not catching this drift, this isn't the crumbs that are laid at our feet by the deep state where you have to dig. This is right in front of you. Now the question is what we're being told completely true? Is there deception employed? Is this being done purposely? Is there a bigger picture or agenda here? These are the questions that we try to dig out. But yes, there is a sense of uneasiness if you ever watch Star Wars, there's a disturbance in the Force. Well, that's what it feels like. And even though people may not be able to articulate exactly what it is that's freaking them out, I think it's fairly evident to see that people are concerned and they understand that there's something going on, and that it has bigger implications. So we have seen an uptick, and it's interesting too, Patrick, because the majority of all the sales we've done over the last 3-4 years have been directly attributed to silver. The sales that we've seen since the war has escalated in the Middle East, and it didn't seem to catch people's attention so much in the Ukraine as it should have. I mean, atrocities of war are horrible, but for whatever reason, the polarizing effect of Israel and Palestinians is such that there are people waking up, and I think that I think that we've seen a much more concerted drive towards gold over the last couple of weeks, because what we're seeing are larger purchases. People saying, "Geez, this is something that is very concerning," and a lot of these people that are buying haven't bought before. And so they're not understanding the value found in silver. They're running to gold because they're afraid of the big geopolitical implications. So the answer is yes, we have seen an uptick, most of it in gold, whereas 98% of the business we've done in 4 years has been in silver. And that to me is a little glimpse into the expansion of the mainstream, who are just catching pieces of the narrative. They don't understand the tremendous value in the story behind silver. They simply see that there is a disturbance in the force, and, well, I better do something that is considered historically safe. First place to go to would be gold. So, yeah, I think this is the beginning stages of what is going to be an expansion into the mainstream's collective awareness. Yeah, it should be. Well, first of all, first and foremost, when you talk about the yield curve, which has been so massively inverted, and the uninverting of the yield curve is typically when we see this recession. But in fact, if you go back over the last 50 years, I don't think there's been a time ever where the yield curve was inverted, especially the way that it has been over the last year or two, that hadn't been the precursor to a recession. The difference is, and to your point, that most of the time we would see that it would be the Fed coming in and lowering the front end of the bond market to stimulate growth. We'll drop short-term interest rates, and hopefully people will take loans and speculate, et cetera. This time, it's not been that. In fact, the Fed has been raising the front end of the short end of the curve, and what we have been seeing is the back end rising, not at the behest of the Fed, but at the market directing yields higher. Whether it be the fact that, I mean, who the hell wants to buy a 10-year Treasury paying less than what a 2-year Treasury is? So yields have to go up to chase that. But at the same time, you have, you have a situation where, as with the banks as an example, as depositors are coming in to redeem their deposits, as people in bank accounts say, I want out of the bank. These banks are undercapitalized. They have to sell their 10-year treasuries, which in and of itself lifts yields. But the bottom line is, you have the banks in trouble. You have the governments, China, Japan, Saudi Arabia, they're all dumping 10-year treasuries. And as they're selling their treasuries, which have been the worst performing asset period over the last several years. In fact, go back to 2020, this will be the worst bond market disaster in history in terms of a bear market. And so as these sovereign nations and as these banks unload their toxic 10-year treasuries and longer maturities, the back end is rising on its own. And so you have a situation that's doubly troubling as far as I'm concerned. A bond market that I think the Fed is beginning to realize that the market is much bigger, if you will, than the central bank. The market should control the rates, not the Fed. The market should be controlled by, or the rate should be controlled by, the natural forces of the market, not by the Federal Reserve. And we're seeing a period of time, Patrick, where foreigners are not buying the treasuries anywhere near the amount that they used to. In fact, the Federal Reserve is probably the biggest buyer of the treasury market. And I think that what we are witnessing is the realization that, look, in a historical context, treasuries and government debt, it's a relatively new ideology historically that government debt represents savings. I think they're beginning to realize that may not be the best pathway, and I think we're seeing a move back to gold as being the preeminent form of savings. And my justification for saying that, it's not that I'm a gold dealer, it's the fact that you have the worst 10-year treasury performance in history last year, coupled with the greatest amount of gold acquisition in history by the central banks. Do you think there's any coincidence in this, that as the central banks are buying gold, they're shedding treasuries? And I don't. And I think that this is a trend that will continue. And we are a country that has signaled more or less that we will choose inflation over austerity. We will choose to not raise yields high enough to break everything apart, and we will inflate our way out of it. But I have said for a very long time that the market has other plans for the treasury market. It will be the dumping of dollars globally that will push rates markedly higher. And then the US has a villain to point to, and it's that those bastards at Xi Jinping and OPEC and Putin, they're the ones who did this to us. And we can get into how I think that happens if you'd like. But the bottom line is that this is a very tenuous situation, and I think the bond market will be something that will be forsaken for quite some time, the illusion of safety in a treasury market that has, in my opinion, lost trust, has lost faith in a country that is 150 trillion in debt. Forget about the 32 trillion. How about the Medicare and the Medicaid, the Social Security, the government military pensions that are 130 trillion? We are indebted. We're borrowing money just to pay the interest on the money we borrowed last. We're insolvent. We're 130% debt to GDP. Anytime a country in history has crossed that Rubicon, it's never come back without defaulting, whether it be outright default or hyperinflation, which is a form of default. So this is stage one of what I believe is a bond market, debt market, liquidity crisis meltdown. And as it gets worse, which I believe it will ultimately, I think you will find gold and silver being looked at by the world differently than it has in a very long time. And, they say the more things change, the more they stay the same, or history doesn't completely repeat itself, but it rhymes very often. And, for most of human history, gold and silver have been considered wealth. There's been this period of time in the last 70, 80 years where that was ignored and replaced with debt accumulation instead as a form of savings. I think we are beginning to go back full circle to at least the very, very sophisticated investors, the central banks, who not only have bought more than at any time in history over the last 18 months. Their numbers this year they bought over 800 tons this year. They're up 18 or 20% year over year. They're continuing this trend. So, yeah, I think this is a trend that will continue, and a bond market that anyone who's holding long-term treasuries, I think, needs to really take a hard look at their portfolio. It's something right now that I think could and will prove to be disastrous for those who are still hanging on, like the banks.
The wisdom shared by Andy Schectman, president and CEO of Miles Franklin, resonates profoundly. His insights into the precious metals markets, interwoven with political and fiscal landscapes, leave us equipped with a deeper understanding. Stay tuned for more revelations and astute analyses from Andy as he fearlessly uncovers the veils that conceal the underlying agendas. Please like, share, and subscribe to our channel. Thank you.